What's up, guys, and happy Thursday to you. It's Thursday, the 18th of February 2016. We're here to do a market overview. So let's get right into it. So we'll start on the Euro USD. So we talked about last what was it? Monday, uh, about this level right here. I talked about, I think that I wanted to see a break of this structure level right here. Where were we? I talked about a break of this structure level right here, and I also want to see a break of this right here. Obviously, we did get the break of this structure level right here. We got a break right here. No, I talked about this and this, I believe. So we broke through this, and this right here, which obviously, I know my error. I was on the 4 hour, right? And I was talking about this right here. I also believed I talked about this right here. But anyways, beside the point, we did get a break of this structure level right here, which means that our bias as of right now is short. How long that's gonna last, I do not know. It will depend on what the market will do. If the market breaks this level, we could go, I would be thinking short at least until this level right here, possibly until down here. So, but what the market is doing right now on the Euro USD is essentially it has done its break. We got the break right here, and we are now most likely going to put in a pullback into this green area or our structure area, and possibly continue down until at least this area right here, right? So then becomes the question, how do I trade it? Well, let me get rid of this, guys, is just on a quick side note because I'm not gonna talk about the day trading aspect. This right here is on the 15 minutes. This is a Gartley pattern which completes at 11 or right here 11,708. So if you want to keep that in mind, if the market goes up, and I'm gonna get rid of the pattern just for now. So let's check out the 1 hour. Like I've said, the most likely thing is that the market will put in a pullback right here. If the pullback, on the other hand, has completed, so if we take a look at this, and this is the pullback, the only pullback we'll get on our way down, that is also possible, right? Because we could just drift down. On a side note here, we have this this basic pattern here, and you can see that the market is putting up a divergence. So you can keep that in mind as well. But we're kind of stalling on the euro. We're just drifting down. This could be like I said, this could be a wedge pattern, which would expect, like I teach it, to do something like this. So this would be a reverse pattern. That's also something if you're trading those basic patterns. But like I say, from a pure structure point, and I would expect something like this to happen if we're going into a pullback right here. Well, of course, some might say that if you're drawing in the market limb for limb or like so, you of course have a lot of movement. I personally like to look at the bigger picture of things, and that's why I am looking at the 4 hour to start with, because this to me is just one move right here, and we're yet to put in a pullback into this level, right? But that's something I would be concerning myself too if the market puts a little pullback and then continues down. Where's the if we're looking for extended targets of the 127, that would be for right here, and actually if this point right here breaks, these extended targets are well possible, and even further down. I would feel comfortable seeking for targets at this level right here for extended targets. We have this structure right here, but obviously this is the strong support level. You can see the market just keeps on bumping into it. So I would not feel comfortable holding any further, at least. Yeah, at least for my sake, or how I do things. Of course, this right here is also a possible extended target if you're looking for a longer period. And the same thing, if this thing breaks, I would feel comfortable going to down here, I believe. Right, so that's what's on the euro right now. We don't have any patterns and stuff like that happening on the 1 hour. I showed you the 15 minutes pattern if you're interested in that. That was on the 7011. What did I say? I've said it already, but this is the euro for you. Let's check out the pound. The pound doing similar thing as the euro. We can see if we zoom back here, if this is our trend line. This is our strong support area we've been talking about for the last 2-3 weeks. We've broken through that area right here. So we've broken 1, 2, 3, 4, 5, 6, the 6 most previous structure points. My bias on the pound dollar. Let's check out the 4 hour. You can see that here. It's pretty similar to the euro. I would expect this to be one move. I would expect the market to put in a pullback into this level right here and then continue. Where to? We have at least this level right here. I would concern myself to this level right here. This is a higher time frame support. So either this level right here, somewhere in here, or somewhere down here if we break this level right here, I believe we would get into a new low. So that's interesting. You can see how the pound dollar has just been trading massively downwards right here. And I really don't see anything on the technical aspect that will expect that to change. Let's see if we do have a pattern on the 4-hour. And this is of course a long way. Yep. Or what? Let's check out the... Just kiss it. Yeah, that will be a valid cipher pattern. As you can see, we don't break above the 618. We're just kissing the line. So the pattern on the 4-hour would look something like this. And that is if the market decides to go higher. Right? So also a possibility. Of course, we're not disregarding the possibility that the market can go higher. There's nothing, and this is something you gotta remember, guys. Even though I'm saying that I believe something and stuff like that, that is not set in stone, and you should not just trade exactly the way I'm telling you to trade, and then send me an angry email if you lose. This, of course, this possibility is also a chance and would be an excellent point to continue on the downwards moving market, right? But from the technical aspects and structure as of right now, the fact is that we do break here. We've broken this previous structure right here, and this is what I would expect to happen, right? Something like this, at least until this area. But of course we do get the problem of setting a stop if we're trying to go short right here. Because I wouldn't feel comfortable in where should I place my stops. Just the only place I could place my stops is above this highs right here, right? Because I wouldn't really count this as a high to hide my stops above. Then just for me it wouldn't make sense, because these two levels right here are just right next to it, so there's nothing telling me that the market couldn't just push right up here, up into this level right here. This would be the first level I would feel comfortable in placing above these levels, placing stops. So, and of course, if this cipher pattern would complete, the stops would go above the export, which is the most. If you can see, we have all this black right here. So in essentially this would be the most secure place to place our stops. Right? We could hide them above these levels, but this would be the optimal place to again place your stops. So I hope you're getting this. And guys, this is of course a long way to there's a long way for this cipher pattern to complete. If this pattern would complete, I'm not so keen on doing an aggressive buy right here and buy it up to this level. I'm not a true believer of that, because like we've talked about the past weeks, this level right here is pretty strong. And you can see that it's already holding. So let's check to the 1 hour. You can see that when we break, if you can see that, when we break, right here. All right, we break this level right here. We do continue. We put in a small consolidation. We break again, and then we put in a small pullback. So I would look at it like this, down to here, small pullback, down to here, excuse me, small pullback, and it immediately runs into this level right here and gets rejected. Goes down, gets rejected by the support right here, comes up, again rejected, down, up, and we are currently at the rejected area right here, right? So if some might say you can go short right here, hide your stops above these two spikes. And yeah, you can do that if you're really interested. I mean, it's a possibility. You do have that strong level, but I don't really see anything else. I wouldn't be shocked if you got stopped out and the market would push higher. You have this level right here also. This would actually be a decent amount of level, a decent, not decent amount, a decent level to go short, more decent than right now, and you could hide your stops above this high. Wouldn't be my first choice because you have this high right here and this high right here. So like I said, this is the area I would feel comfortable placing my stops above. The first one, and of course the above the X would be the more suitable the more suitable area, right? You could go to the lower time frames and hope to get a double top or something. If the market would push up to, let's check this out. The market would do something like this. We're at that area right now. Something like this. You can see this red line marks a structure point. If you get a double top or something inside here, maybe you could go in for a day trade and shoot for this for the level right down here. But we're not talking about the lower time frames. So that's like I said, that's what I'm thinking about on the pound dollar. I also, because I've noticed on TradingView, because I'm right there, I've noticed people putting in patterns, and I'm not saying they're wrong. This is the pattern I just drew in, but this is obviously a 4-hour pattern, right? Or even a daily, or maybe not a daily, but obviously a 4-hour pattern. And I see people putting in the pattern, and let's say you have a trading rule or something like that, that you don't trade the 4 hours or the daily, you only trade the 1 hour and lower. Let's say you trade the 15 minutes, right? This would not this would not be a valid cipher pattern on the 15 minutes, right? This is simply too large of a pattern. You could, I personally, I find it to be too big on the 1 hour even. So I would not trade this pattern off the 1 hour and draw it in like this, right? That's just my personal opinion, because I see people doing this most or quite often, just saying that they found a pattern and drawing it in on their let's say they're trading the 1 hour and this is a valid pattern on the 1 hour. Right, you could do that. I'm not saying you're wrong, but for me this is obviously a 4-hour pattern. So, but that's beside the point. Let's check out, and guys, I'm not gonna go over all the pairs today because I want to keep this thing short. I've been going way over the time budget and limit in these in this video. So let's just take 4 or 5 patterns, and you can comment below if you want me to do a specific not patterns, excuse me, specific pair. On the dollar yen, real quick on the 15 minutes, if you're interested in that, we have a Gartley pattern completing down here. This would be the area to go long if you're day trading, but let's check out the 4-hour. So we continue our talk about the structure level right here. We got the bat pattern. That's on the. This is what I was saying about the patterns. This would obviously not be a pattern on the 4-hour, right? Can you see the difference? Can you dig it? Right? My personal opinion, but whatever. If you were to go short, if you wanted to jump on this downwards moving market, you would have gotten an excellent opportunity. This is just trending pretty nicely, and look at this risk to reward you're getting right here above the X. If you're shooting forward to down here, it's a fantastic setup. Let's check out the 1 hour. Let's see the bat pattern. So here's the bat pattern. You can hide your stops above the X leg right here, and you can see that we do have a structure right here. So an excellent structure to hide your stops, and if you wanted to jump on the train, you would have. And as of right now, I believe we hit the 38, so we're in a like so right here. I don't believe I don't know if you can see it because of the fibs and the pattern. But we're now in a risk-free trade. If the market decides to test these levels right here again, we are our stops have been moved to down here. But currently we're just drifting down, right? So not much on the pound, excuse me, on the dollar yen beside this bat pattern. I hope you got involved in that one, because I believe that we could be shooting for this area right here, right? We may drift up and down, and that's why, sorry about the day trading thing. And that's why we could go long right here, because this is on the 15 minutes. You gotta realize that. And we could drift up and down on the 15 minutes. So let's say that we go long right here, and the market decides to turn on a point. The market easily could go up to here and then keep heading down, right? So even though my bias on the pound, excuse me, what's up with the pound? On the dollar yen is down or bearish. That doesn't mean I can't day trade it long, right? So there's a difference there because my bias on the 4 hour is not the same as on the 15 minutes. So you can see how small of a change this is on the 4 hour. You can see from here to here, and this is basically one candle, right? So that's the reason for that. But on the 1 hour, this could be actually this would be the minimum size of a pattern for me to think of it as a pattern on the 1 hour. Of course, you can see it better on the 15 minutes. And you would have, at least for me, I would have to have a more than 20 pips to target one for it to be a valid pattern on the 1 hour. We do get more than 20 pips on this one, so this would be considered a valid quote-unquote pattern on the 1 hour. But bare minimum, you would I would actually trade this one on the 15 minutes. Right, so let's take one more. Let's take not this, pretty much the same, euro yen. Let's go to the 1 hour. The euro yen. It's just, you can see how the market goes into the structure area right here, and then it's heading down. We're gonna make a note of this area right here, down here. Obviously, you can see this market comes in a, and this is a large move down, hits this point right here, something happens, and then it shoots up. So have that in mind when the market comes back down in this to this area. We could, let's see if we get something like so. We got an ABCD coming into this area right here. We have some fibs, do we not? We have the 1414, 618 just below. Do we get an inversion? I don't think so. Get the 618 just above. Let's check out if we get a 618. This would not be, oops. This would not be a valid Gartley, so that's out. And I just found out you can't say the H Arman E move, because that has been trademarked, and for all people on YouTube saying that word, the H word, you would get, I don't know, you would get reprimanded and banned from YouTube or something. So we're not gonna be saying that word. But obviously, this would be an ABCD pattern. I don't believe someone has patterned that. An ABCD, because we do get some fib confluence inside here, right? Not the perfect ABCD, but a valid one. So at least for the euro yen, we will be taking a look at this area when we, and if we get down there. Let's take one more. A quick. Yes. The New Zealand dollar, US dollar. right? So this is the drawing from last week. Can you see it? I talked about if we would break this point, I would like to see a break of this point and a break of this point. Break here, right? Break of structure, break of structure. We broke this point. We broke this point. We broke this point. We broke this point right here. I said that if we would break all these points, I would believe that the market would put in a pullback and head on down, right? That's exactly what's happening right now. You could, if you got the opportunity, and I drew this in here when the market was here, so we pushed a little higher, but then we're getting down. You could maybe see it better on the 4 because I don't want to confuse you with the break to the upside here. So this is what we're looking at on the 4 hour. So we broke all these structure points. So on the 4 hour we're thinking bearish, right? This is an excellent risk to reward, which, or not an excellent, it's a decent risk to reward. You can hide your stops above these highs right here. What's the ATR on the 4 hour? It's 32, so 70. That's somewhere around here. That's just, this is not, I would prefer to go above this level right here on the 4. If I were taking the trade off the 4 hour, you can obviously take it off the ATR off the 1 hour and hide your stops above these levels right here, but whatever. Let's check out the 4 hour again. I'm going to explain the moves of the market. So we've broken through, we've gotten the pullback right into previous structure right here, or the previous high. This is of course the previous structure, the previous high. If you were to go short right here, I would feel comfortable at least going to this level right here, something like this. And it's just a matter of making your risk to reward line up. This would be an excellent risk to reward, and of course this is not. I just moved it, so we can measure that out on the 1 hour, but at least until here, and possibly somewhere in this green box. You can see if your extended targets are the 127 from this high to this low right here. Your 127 would complete inside the green box. So you could shoot for the 127. You could even shoot for, if you're long term, this low right here, right? And that would be an excellent risk to reward, to do something like this, right? And this is not, what was it, 30, 130, something like this. So this would be a decent trade if you're long term, if you're trading the 4 hour. This could be a possibility, and not a bad one. So, excuse me. So yeah, I think I'll stop on the New Zealand dollar, US dollar. Yeah, I was gonna show you the 1 hour. So what I was talking about was hiding your stops. So if we got short, where was it? I was talking about this somewhere around here. The ATR on the 1 hour right is 14, 15. So that's 35, 45, 50, 53, 53. And then it's just a matter of where you're gonna take targets, right? You can shoot for down here. That would give you an just about better than 1.5 to 1. You could shoot for, sorry, you can shoot for the 127 inside the green box, and you would get a almost a 2.5 to 1 risk to reward. So that's a decent risk profile. And you can see that we've gone up, we've ran into this level right here, and then we're on our way down as of right now. So if we take a look at this from the 1 hour standpoint, if the 1 hour is your higher time frame, you obviously did get a break right here, and the market is doing something like this. Would this be possible? Of course this would be possible. So it's just a matter of time frames, right? And of course a matter of how the market is willing and is going to move. We don't, like I've said, this is not what's the right word? We are playing against probability, right? So we're just thinking what's the most likely thing to do. So and you of course gotta have some knowledge to back that up. I mean, I've explained why I think we would continue at least to down here because all of the breaks of the points right here on the higher time frame. But of course the market could go higher. I could lose. I'm not saying that even though this is a good opportunity, I'm not saying that I wouldn't be stopped out. I would not I will not go crying about it. It's just would be another trade for just another trade down the drain, and that's fine, because if we do get in the long term 100 setups just like this, let's take 100 setups, and we have this risk to reward. If I win 50% of the time, and we're talking about 50%, half the time we lose, half the time we win. You would not have to be a rocket scientist to see that with this risk to reward, I would stand up a winner. Why? Because I gain more when I win than what I lose pip-wise when I lose. Right? It's quite simple. So out of 100 trades, 50 trades down the drain, 50 trades win, I would stand up a winner, right? If, on the other hand, my risk to reward would look something like this: 100 trades, 50 trades down the drain, 50 winners, I would stand up a what? Yes, a loser. Why? Because I risk more, 53 pips, then I stand to gain 34. And if we place those numbers together, I would win 5,000. I would lose 5,300 pips, and I'm talking if we have this exact setup, always the same pips. I would lose 5,300 pips, and I would gain 3,400 pips, and then it's just a matter of plus and minus, and I would lose 5,300 minus 3,400, which is what's that? About 1,700 pips, give or take. So that's the reason we talk about the risk to reward, right? So I hope this has been helpful. We've gone over a few pairs. If you want to If you have any pairs you want me to take a look at, just shoot me a comment or an email or whatever to info@forexviewers.com. And I will be back on Sunday or Monday or something like that. Alright, so until next time, guys.